So did oil really go to negative $37 a barrel? Yeah, it did. But the first thing you need to understand about it's not actual like the gas you pump at the gas station. It's an actual oil contract. It's basically a contract. It's the right to either buy or sell 1,000 barrels of oil at a certain price. So what happened, and the reason how it went to negative $37 is for one of the very few times in history, something called contango occurred. And as an investor, contango is a beautiful thing if you're on the right side of it. And what it basically means is I had the ability of buying a contract at $30 a barrel. So I can buy a contract that says, hey, I'm going to take possession of oil at $30 a barrel, 1,000 barrels at a time. And then I can immediately, because of the way oil was trading, could sell that contract of 1,000 barrels of oil for $35 a barrel. So I could make $5 just like that. Basically, hey, I'm going to buy from Steve at $30 a barrel, and Harry's going to buy it for me for $35 a barrel in December. So all I got to do is store that oil. So every hedge fund, every major player that follows and tracks and trades the oil market saw this, and they bought the crap out of oil. And what happens when they bought the crap out of oil? They had to take physical delivery of it. It wasn't just a contract exchange. So they had to take physical delivery of that oil. Why? Because Frank, I wanted to buy it off him for $30 a barrel now, but Harry didn't want it till December. So I got to take the oil right now and I got to store it. Well, what happened is there's only so many places you can store oil to be by a major pipeline or refinery where it wouldn't eat up all my profit storing it somewhere crazy in somebody's backyard having to transport it back and forth. And so what ended up happening is the storage filled up almost overnight. And there was no more storage anywhere. Well, what happens when there's no more storage anywhere and we have a major surplus in oil? All the people that were coming to market and selling oil, okay, on that magical Monday had no buyers. People had too much oil. They had just done contango and they had made all their oil purchases, they had to store them. So with no storage, you got no buyers to put it. So rather than people going to market and saying, hey, I'm going to sell my oil at $30 a barrel, they're like, $20 a barrel, anybody? $10 a barrel, anybody? Free oil, anybody? And they're like, sorry, we have no place to put it. I don't want your free oil. $10? I'll pay you $10 to take my oil from me. $20 to take my oil. $30 to take my oil from me. All right, $37. I'll pay somebody $37 to just take my oil off my hands. And that's what happened. Because of that, there was no storage. And that's how oil contracts dropped to $37, negative $37 a barrel. Well, it's never happened in history. Well, what happened the next day? Yes, the oil market did rebound, but it rebounded only to $10 a share. And now here on April 30th, it was trading back up to about $17 a barrel. Now, if you are somebody that likes a little bit of a riskier investment, check out buying long oil EFTs, because it's a great way to look at it that you can actually follow the price of oil. Because even though with COVID is really suppressing the demand for oil, which is what's keeping the price down, you have a great opportunity to actually trade the actual price of oil through electronically traded funds without having to buy these actual contracts and store the oil. So check it out if you have a brokerage account, USL, or you can check the comments below of a couple ones I do. It is a long-term play. It is risky, but we all know oil prices will rebound when we resume to be normal. So hope you guys give you a better idea on how oil went to negative $37 a barrel.